You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Welcome back, everybody. Welcome back, Brandon. Hope you're well and rested today because I am not.
I can already hear it in your voice. You sound like a sleepy boy.
Yeah.
Your poor dog, what's been going on? Your dog's not...
So I'm going to be a little bit sleepy today, guys, because my dog was sick last night. So I was up every couple of hours just letting her out of the house and kind of making sure she was okay. So
no.
And it's been 2 nights in a row that it's been like that. So I'm on the back of 2 nights in a row of not very much sleep. So that's me for today's podcast.
Oh gosh. I'm going to have to be double as cheery today.
Yeah,
I'm
you
going
have
to
to
pump you up somehow. We've got some cool stuff to talk about. We've got a lot to talk about. We'll talk about Charlie Munger. Well, you know, Charlie Munger's stock market moves, they always pump you up a little bit.
Yeah. Always exciting.
Tesla stuff. That pumps up me more than it pumps up you when we talk Tesla. And we got Facebook stuff to talk about as well. That was crazy. How long was that? Was like a six hour outage or something the other day.
Yeah, and that's not even probably the biggest thing that happened for Facebook. Right. Okay. So big week for Facebook. We'll talk about that as well.
It's pretty crazy. I think most of the outage happened while we were asleep.
Yeah.
Because I didn't really experience an outage at all. Did you experience much?
No. I believe it ended sometime in the late morning for us. So it was like 9 a.m. or something like that. So yeah, it was pretty much while we were sleeping. Yeah.
Right. There you go. Yeah. Because I woke up and all these memes were about how Facebook's down. I'm just like, wait, what's working for me?
Yeah.
I saw something funny. There's this website that tracks whether websites are down or not. I think it's called like isitdown.com or something like just basic like that. And Marquez Brownlee, MKBHD, tweeted a picture of the site. It's like when Facebook and WhatsApp and Instagram all go down together, it drives enough traffic to crash that site. so the Is It Down site was also down. Which is pretty funny.
That's hilarious. Wow. Yeah. So we'll talk a little bit more about that later in today's episode, but we'll get straight into it. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker or doing it manually through Excel or just manually adding them one by one. And once you add them all in, it will give you an accurate view of the return that your portfolio is generating. So it'll track your capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then the main reason why I've been using it for, I think now over almost 5 years now.
It's been a while.
It's been a long while, is for when it comes to tax time. So Sharesight will generate up to 10 or 12 different reports now that can be used to track performance as well as at tax time to work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, try it for as long as you want, or you can also use that link to sign up to a premium plan. And when you do using that link, you'll get 4 months off a yearly subscription. So go check it out. And thanks to everyone who has used that link to sign up and is supporting the podcast in a small way.
Yeah, absolutely. Where are we going to start, Hamish Hodder?
Yeah, I mean,
Charlie Munger?
I think we have to. I think we have to start with what's going on. I honestly, I hadn't really kept up with this. This kind of flew under the radar for me. So tell us what's going on. Yeah,
well, I mean, to be honest, there's not usually very much Charlie Munger 13F news.
No, he's one of the most inactive investors ever.
Yeah, I would call him extremely inactive. So for those that don't know, so Charlie Munger bought Alibaba in Q1 of this year. And before that, so I use this website called Dataroma, which tracks all of the different moves of 72 different super investors. and you can go to the activity tab to see just what all the activity in their portfolio is. And, usually you'll get, okay, Q3 2021, Q2 2021, Q1 2021. It'll just keep going back quarter by quarter, all the different trades that this person made. For Charlie Munger, it goes Q1 2021, and then it goes back to some quarter in 2014, and then that's it. He's the master of sitting on his ass and doing nothing. I think one of his quotes is like, you don't make money when you buy or when you sell, you make money when you wait. Yeah. I don't know if that's his quote or just a quote that he uses a lot, but he's the master of being inactive in the markets and just waiting.
Yeah, I mean, it's kind of insane. I think most people wouldn't dream of even going 1 year being inactive without making any changes or not buying the same stocks, not looking into a new stock, for example. So to go 7 years is
quite well.
Takes some kind of discipline. And it also indicates, I think, partially, his it's kind of an action that indicates his opinion on what's available for investment for him at the moment. There's just a lack of things that are either big enough for him to look at and also, great business that's at an attractive price. But Alibaba has been the first one in what was that, 7 years or something for the Daily Journal Corporation, at least. Yeah.
Yeah. So the story is, so Charlie Munger, he released the Daily Journal Corp's 13F for Q3 2021. It showed that he added 82% to his Alibaba position, so he bought another 136,000 ADRs. Right. And the reason that it's interesting, I mean, we know that Charlie Munger likes Alibaba, right? Because he bought it in Q1. But the reason that it's interesting that it's popped up now in Q3 is because Alibaba's just been on this constant decline.
Yeah.
For a long time, for like a year now, maybe a little bit more than a year.
Yeah.
And he started buying in Q1, and at that time, for context, the shares were between $220 and $270 US for an ADR. And that's when he made his original investment. And then Q2 came and went, and he decided to do nothing, even though the price continued to drop. It got as low as 206 in Q2. So that was kind of confusing, but I guess, I was thinking like, is he maybe he just wanted to make a once-off investment, he'll just leave it at that. Because he did. He had opportunities to add more at a lower price, and he chose not to in Q2. So everyone was kind of like, okay, maybe this is just one and done kind of thing. But then Q3 obviously has come around. The price in Q3 has slid. So just remember, he bought somewhere between 220 and 270. The price in Q3 has slid from 220 to 150. Yeah, it's quite the downward trajectory, isn't it?
Yeah, I think it's now 53. I just checked it this morning. I think about 53% lower than its all-time high that it set, as you said, I think about a year ago or within a year. It has continued to slide. It's following that famous rule that Warren Buffett talks about, that every time he buys something that, of course, it has to fall substantially after that. So, I don't know. It is interesting that you mentioned that, he didn't progressively add more, as you kind of might have expected for someone making a big position in an investment, that if they started in Q1 and it continues to fall, they would just add a little bit more in Q2 and a little bit more in Q3. But it seems like he kind of skipped on Q2 for some reason. But now that it's gotten down even lower, that maybe it's another trigger for him to add to the position substantially. Yeah.
My running hypothesis is that he just didn't have any cash lying around in Q2. He was just out of cash.
Yeah, he wanted to buy something else. He bought like a $50 million house. He bought that house, the one.
The one. That was like, how much was that? It was like 500.
Yeah, 500 million or something like that.
Something stupid.
There's no chance it goes for that though. Eventually.
Nah. I think the guy was saying how that house got put into receivership or whatever. I think the guy that built it just declared bankruptcy as well. So anyway, different story.
Not related. A couple of episodes
not related
back,
at all.
if you're interested.
So I wanted to talk a little bit about Alibaba, because clearly there's obviously been a lot going on with China at the moment.
Yes.
Chinese businesses. The Chinese government stepping in and putting, kind of cracking the whip on a lot of these big companies. So, clearly him making a sizable investment in it now is showing that he really does not believe this is a long-term issue. So I wanted to talk about, for example, some of the stuff in terms of Alibaba, just Alibaba, how they've kind of butted heads with the Chinese government over the last little while. So the Chinese government blocked the Ant Group's IPO. We all know about that.
Yeah.
Recently, they announced they're now looking to break up Ant Financial, or break up Alipay. They also, and remember that why that's relevant is that Alibaba owns 1/3 of the Ant Group or Ant Financial. And then in terms of just Alibaba, the CCP also slapped a $2.8 billion antitrust fine. That was not too long ago. And more recently, they've actually just pretty much forced Alibaba to make a $15.5 billion pledge to common prosperity initiatives. And this is really, these four things are really why Alibaba's shares are just tanking so much at the moment. And people are just so nervous because you can run any sort of discounted cash flow, and it's not hard to see that the shares are undervalued. They're cheap. But the reason is because people are just so hesitant to buy this stock because they're so nervous that the CCP is going to continue to really hurt Alibaba's business.
Yeah, I think there's a combination of things going on. The first thing is that we have to remember that most people investing they don't have these huge horizons that Charlie Munger has, and long-term investors, they're looking over maybe the next year. And whenever there's, maybe more regulation news coming out and this and that happening, that raises a lot of uncertainty in the next couple of years. So that's happening. And then I think on top of that, there actually is some concerns that there's long-term uncertainty around the business in regards to, things whether Alibaba will be forced to break up or there'll be regulations that impede their business substantially. So I think there's a couple of things going on, which is why it's dropped so much so quickly. I think there's a combination of short-term concerns, maybe some long-term concerns as well. But yeah, certainly there's a lot going on in China. And those aren't, those are just the things related to Alibaba specifically. You have other industries around it, similar businesses that are getting regulated. We have the Evergrande stuff that's going on that is threatening or may threaten to collapse the Chinese economy. So there's a lot going on, right? A lot of different things. We're still amidst the pandemic. We're still seeing the effects of that. So there's a lot of things that are, I think, driving, or you could say are factors that are driving the stock down. And then the analysis is really whether you think those are short-term issues that will not hurt the business long-term. And then, what does the cash flows of the business look like on the other side of this? And clearly, Charlie Munger believes that it looks pretty good.
Yeah. And that's what I was going to say as well. Just trying to kind of put my Charlie Munger hat on, I guess, is that you're right. There are definitely short-term concerns and long-term concerns. Obviously, the main driver of the stock going down at the moment is all these short-term things that keep popping up. But I think if I had my Charlie Munger hat on, the way that he would see it is he believes that, yes, there are short-term things, and this is very much in line with what the CCP is kind of doing, that their number one goal is common prosperity. That's like they've blasted that everywhere. It's like common prosperity. That's what we're aiming for. But it's also not like this truly communist place that everybody kind of talks about it. Like that, I was listening to Charlie Munger and Ray Dalio talk about this recently, and how all of the kind of elements of capitalism that they're bringing in. Xi Jinping is opening a new stock market in Beijing for small medium enterprise. So it's like this blend of different kind of economic approaches. And I guess that Charlie Munger's thought process would be, and this is kind of what Ray Dalio talks about as well, is that they're always going to act in the interest of long-term prosperity. So you might get this short-term pain where they're like, okay, you're being a little bit too monopolistic. We're going to slap a fine on you. Or, we're going to shut down for-profit education businesses in China because they're just charging exorbitant fees. And it's basically a toll bridge to get into certain universities. And they don't want that. That doesn't align with common prosperity. So I think there are going to be these short-term things that they kind of crack down on. And I think that for Charlie Munger, and Ray Dalio talks about this as well, when you're approaching China, you just have to think long-term. Like you have to maintain a long-term approach, because what they have demonstrated is that they are becoming increasingly adopting pillars of capitalism and allowing kind of free market-ish kind of policies to run. So from their point of view, they don't believe that the Chinese government is going to continue to crack down and beat the crap out of business. I mean, they're a smart government. They've seen that this change towards more capitalistic notes has been working, so they're likely going to continue on that path and not backtrack. So they're just Charlie and Ray as well, very much of the opinion that you have to go long and believe that the Chinese government is still interested in having business flourish. And hopefully that leads to long-term, success of large Chinese businesses. Does that kind of make sense? Have I kind of summarized that line of thinking well?
Yeah, I think you characterized that as well as you could. Yeah, that's really good. I just think, certainly, I think that the stock going down over the past year kind of looks bad, I think, to a lot of people. But I'm sure this is exactly what Charlie Munger and many other value investors want, right? You want to see a really great business. If that's the conclusion you reach, you want to see it get as cheap as possible. So even though it's it's fallen a lot. I'm sure he's glad that he's able to add 82% to the stock now. But my opinion's still the same on the business. I don't think I understand the business well enough. I don't think I understand the area well enough. So that's kind of my opinion on it. But I'm happy to observe it, and I always hope that these investments work out. I'm not. Not investing in the business doesn't mean I'm shorting it. So, I hope it does do well over time.
You just have this massive short on Alibaba.
Yeah.
Tell you what, you'd be sitting pretty if you had done that. I don't think I'd ever short a stock.
No, that's look, it just goes against everything that we all of our principles that, in the short term, anything can happen, anything can happen in the short term.
What's that markets irrational quote?
Markets can stay irrational longer than you can stay solvent, I think, or something like that. So you've got to believe that, even if Alibaba is extremely undervalued, even if that is the truth, that, there's no reason why it couldn't go down another 50% from here. And that's just markets for you.
Oh, absolutely. Yeah. But I thought that was quite interesting. But clearly, Charlie Munger is an investor that I certainly respect. He's a smart dude.
Yeah.
He's a smart dude. So I'm very interested. And because it's partly because he's such a smart dude, and also the fact that he just never does anything. Those two factors combined means that when he actually does pull the trigger on something, I'm very interested.
Yeah, it's unbelievable how infrequent he invests. So all eyes are on Alibaba stock, and will be for the next little while, and we'll see where it goes from here. Over the last 6 months, it's down significantly, and we'll kind of see, I guess, what happens over the next year. Do you think let's make a not real prediction, but a fun prediction. Let's make a fun prediction about Alibaba.
In 12 months?
In 12 months, yeah.
Up.
Yeah, I'd probably say the same. Yeah. Our predictions aren't working out too well this year so far. We had Bitcoin down. I'm pretty sure it's up for the year. Tesla, probably, what did we say? We said Tesla was going to be down as well, I think, right? Yeah,
so I think we might. Are we right on that one? Maybe. I don't know. Timelines get fuzzy with Tesla stock.
It's up 7% from the start of the year. Okay. So we were right throughout the year, and now it's kind of recovered. But yeah, we're not the best at making short-term predictions, although
no, we're not. Maybe we should just leave that. Leave the short-term predictions alone.
Yeah. Should we talk about?
Talk about Facebook. I want to know what's going on with Facebook.
Yeah. So Facebook probably had one of its worst weeks in a long time. Maybe one of the worst weeks since it copped that, I think, $8 billion fine or something. That was the largest fine ever or something. So Facebook's had its fair share of tough weeks, but this is a tough one. So there's a couple of things that happened. We spoke a little bit briefly earlier about about the first thing that happened. So on Monday this week, Facebook, Messenger, Instagram, and WhatsApp were all down globally for almost 6 hours, which is kind of
insane.
It's kind of crazy when I read that, I just thought, how can they let that happen? How could you be down for 6 hours? Like, that's a long time. Like,
yeah, I reckon.
It's just crazy. Crazy to me.
Yeah, for these companies.
I mean, you would just think, especially when it's a global outage and you have people in all regions, a lot of people, I think billions of people lost access or had limited access to Facebook. I think you could post, but you couldn't react to things or like comment or comment or anything like that. So if that's happening, you would think, and I'm sure they were, that they have to be on it immediately, but it's crazy that it still took 6 hours for them to fix it. And I'll talk a little bit about what their process was, what happened, and then what they had to do to fix it.
The thing that pops into my mind is that with, how many daily active users does Facebook have? It's like 2 billion or something like that.
2.5 billion, I think.
2.5 billion. I just feel like if you got some sort of app that's that popular, I feel like you would have multiple layers of redundancy and backup in case something like this were to happen. But I don't know.
You would
clearly not.
You would think so. And
maybe that's not how this software kind of stuff works. I don't know. Maybe I'm just saying something that can't exist. But yeah, I feel like Facebook's down. Quick, boot up the second generator, boys.
Yeah, just click that button and we're back online. No, it's not that simple. As I discovered as I was trying to learn a little bit about learn a little bit about what happened. But this was, of course, the biggest outage that Facebook had in years, and you could argue that it's probably the most costly Facebook outage ever, because Facebook is, of course, as big as it's ever been. And, Facebook isn't just sharing things with your friends anymore. You have millions of businesses that rely on Facebook, Instagram, and WhatsApp for communication with customers and clients. Businesses run massive advertisement campaigns. There's events, ticketing, and many other things that are done. I mean, even if you just zoom in on advertising campaigns, can you imagine how much money a business that's spending $1 billion on Facebook ads a year loses in 6 hours? I mean, it's a lot of money that they would be losing on, generated revenue from that. So even that specifically, but I think more broadly, that's more applicable is all of the small businesses that use Facebook to communicate with customers. 6 hours, if that's, during the day, then that's a long time to not be able to communicate if that's your main mode of communication. So, it's not just about not being able to post the Instagram that you had scheduled for Monday afternoon.
Damn it.
There's a big cost, of course, that kind of ripples out. So it's a pretty serious thing. On Tuesday, after the outage, the vice president of engineering at Facebook released a blog post and explained with a lot of technical detail kind of why this happened and why it took so long for them to fix it. And I'm not going to get into the details of it because I don't understand it. I'm not an engineer.
It was Cambridge Analytica, wasn't it?
It was. Yeah.
Thought it might be.
Zuckerberg had too many bots liking his posts. And it just...
too many fake accounts.
He was...
bastards.
Yeah, he had like 6 laptops open. He was replying to himself, like a number of times. He's very active on Facebook. Do you follow him on Facebook?
Oh no.
He posts a lot and he replies to a lot of comments. He does like to interact on Facebook. Whether or not they're with real people, I don't know. But he's
there he is.
He said
he's got 117.8 million followers.
Yeah, he's got a lot of friends on there.
He does. Yeah. I didn't know that there are 117 million bots on Facebook. That's crazy stat.
Yeah, that's how we just have to remove that from the daily active user number. And then we know then we know the true number.
The true number. You're smart, Hamish. That's very smart.
We're on to it now. No, but the vice president of engineering released a blog post, and they said during one of these routine maintenance jobs, a command was issued with the intention to access the availability of the global backbone capacity, whatever that means, which unintentionally took down all of the connections in our backbone network, effectively disconnecting Facebook data centers globally. She said that they actually use an audit tool to check commands before they're applied. So whenever a command is being used in the back end, I guess it goes through this auditing system that should pick up whether it's going to do something that's going to hurt the network.
Makes sense.
But the audit tool actually encountered a bug. So it was the audit tool that kind of failed, missed the command, and that took down the entire network.
Jeez.
Also, imagine being the engineer. I mean, I'm sure it was like a team of engineers, but just imagine being, if I like to imagine there's one engineer that just sent one command and then all of a sudden everything just in the room just went black. Uh-oh.
Boop.
Gets on Facebook Messenger groups to talk to the team and like can't get through.
Hey guys, just updated the latest Oh no.
Oh no. Doesn't have any phone numbers of his colleagues. Everything's just through Facebook, so he can't communicate with anybody.
Man, that's just bizarre. You would have thought, I don't know, that audit tool, that's a pretty big thing to miss.
Yeah.
There you go.
I mean, there you go. And then, so in terms of, I was wondering the exact same thing you were thinking. Why can't they just why isn't there just a button or a new command they can enter that just, fixes it, that just gets it back up and running?
Control Z.
Yeah, exactly. Just go back, just undo a couple times, a couple commands. No, so they can't do that as it is. So what they had to do was they needed to send a team of engineers to the physical location of the data servers. So they had to actually send people to where the data centers are and debug and restart the systems manually. So they actually had to physically go there. That was the first reason why it took a little bit longer. And then the second reason was, which is kind of obvious now that I think about it, it actually took them just a long time for the engineers to get inside because there is a huge security protocol in place. And they didn't explain what that is, but I presume it's that there's a number of, there's a number of checkpoints that need to be passed by people of certain authority in the company so that they can't just send anybody through. And maybe they took a long time to get in contact with the necessary people to get inside the servers. And that makes all sense now that I think about it, because you want to have obviously the utmost security at your physical servers.
100%, yeah.
I don't know how high that goes in the company, like who has the authority to kind of do that and whether they have to be physically at the server as well. I don't know like the details of that, but it makes a little bit more sense now that it's explained. But also, like, why?
Yeah.
So
this is crazy.
Yeah. So that
you imagine being that guy on the security standpoint. The engineer's like, look, Facebook is down.
We need to get in there.
You're right. Facebook is down, but I don't know if I can let you through. This could be a trick. That would just be insane.
Yeah, I like to imagine that they needed Zuckerberg to like approve it or something, and he was just, I don't know, out wakeboarding or something for 6 hours straight.
Smoking some meats.
Yeah, he comes back in, and like they're all waving on the beach for like 4 hours, and he's just like waving back at them. And then
hey guys,
he comes in. What? Facebook's been down for 6 hours, Zuckerberg. Mark, get in the car.
Oh dear. This is crazy.
Yeah.
What a story.
So,
this is insane.
Yeah, it doesn't happen very often. Obviously, Facebook goes down in regions and from time to time, and it's super frustrating. But for 6 hours globally is kind of crazy and very.
Well, that's the thing that gets me. Sorry to butt in.
No, you're right.
I was trying to wonder, like, when would the last global, like the last time where Facebook was down globally? I don't even know, because you're right. When you think about Facebook or Instagram being down, it's usually just a small region, and then they just figure it out, pop it back up. But it's never like everybody has lost access. I mean, I don't even know. I can't remember if there was a time where it was down globally. I think the severity is the fact that it was global. And the fact that it was 6 hours. Like 6 hours is a really long time for any sort of outage. And the fact that it was global is just like what's caused this to be such a big thing. Yeah,
exactly. And certainly very costly. So of course it was costly, as I mentioned, to a lot of businesses that use Facebook and couldn't during that 6 hour window. But it was costly specifically to Facebook shareholders. The stock was down 4.8%. And Mr. Mark Zuckerberg's net worth went down $8 billion. For that 6 hour period. So pretty rough.
Wow.
1.25 billion per, or not quite that, but a bit over 1 billion per hour that it was down, which is rough
Wow.
for Mr. Zuckerberg. But
there you go. So what did you say? 8 billion?
8 billion over 6
Damn.
hours.
So he's only got $108 billion left.
Oh no.
But no, seriously, like even that's quite a big chunk to be taken from Zuckerberg. Facebook stock dropping 4.8% doesn't do that too often. Yeah, I think when was the last time it dropped 4.8% besides February, March last year? Would have been maybe Cambridge Analytica or sometime around there.
Yeah. It doesn't. It's a big company, so it doesn't move all that much. Too often. But believe it or not, that probably wasn't the worst thing that happened for Facebook this week. So yeah, Facebook's.
Did Mark Zuckerberg die or something?
No, he didn't. Not quite that bad. Maybe I drummed it up. But a former employee who is now a whistleblower was actually testifying in Congress this week and basically leaked a bunch of internal data. She's a data analyst who used to work at Facebook and Google and a bunch of other companies. And she leaked a bunch of internal data about research that the business had done internally, and has been testifying at Congress and making basically a number of claims about the business. So this is kind of an ongoing story. So there's not kind of too much to talk about, although there's a really good 60 minutes interview that she did if you want to catch kind of her complete perspective on it. And then Mark Zuckerberg wrote he made a post on Facebook that was sharing a letter, or an email, I should say, that he sent to all of the Facebook employees. So that's kind of his response. It's massive. Right. So if you have, if you want to spend 20 minutes. Yeah, exactly. It's an essay and a half. And a lot of the comments are pretty funny. They're just kind of making fun of Zuckerberg for waffling on for so long. But considering the severity of some of the claims, it kind of makes sense that he made such a long response. But in terms of her claims, she made a lot of different claims, but the three key ones are that she argued that Facebook was harmful to kids, and in particular teenage girls, and she released some internal documents from Facebook where they had done their own internal investigation, and while some of that investigation did show that Instagram had a positive impact on kids, there was some that, in particular teenage girls, and in regards to body image, that there was that it was doing harm, and that I think it was like 13% of girls who responded to the survey had said that Instagram had made their mental health issues worse. So
that's not great.
Sharing that and kind of testifying on that point. She also said that Facebook's algorithm is fueling an increase in civil unrest and polarization, and that it's actually driving content towards people that makes people angry and more, I guess, angry against each other politically in particular.
To be honest, I probably agree with that.
Yeah, I mean, for sure. And I think part of it, I think, is in human nature. I mean, it's not just on social media, and social media might be kind of maybe it is fuel to the fire in that case. But I mean, if you look at, what shows people are interested in terms of like reality TV and that sort of thing, I mean, people love to consume conflict. And I think social media is just a very maybe raw outlet for that. So,
I guess if you got like a search function, which is like the number one goal is to get people to click on stuff, then it's naturally going to learn to feed you the stuff that if you click on conflict-based stuff or political view, opinion pieces or whatnot, then it's just going to keep kind of snowballing. But I'm sure that the AI or the neural net, the search algorithm's probably like, oh, we're doing a great job, guys. Look, these people are just clicking on all this stuff. But it's like, well, what are they clicking on?
Yeah, exactly right. So, I mean, there's certainly, I think, to some extent that happening. And then her last kind of big claim was that with all of these things, Facebook executives essentially refused to do anything about it. So she was basically claiming that they know about these issues and they're refusing to do anything about it because they always choose maximize profit over the safety of their users. So that's kind of the big thing that's come out this week from Facebook. Zuckerberg, as I said, responded with an email that was sent to all the employees, and it is massive. So there's no way I could go through all of the things that he said in it. But a couple of the main points he made was that he said, at the heart of these accusations is the idea that we prioritize profit over safety and well-being, and that's not true. And then he went on to kind of give a couple of reasons why. He also added that the argument that we deliberately push content that makes people angry for profit is deeply illogical. We make money from ads, and advertisers consistently tell us that they don't want ads next to harmful or angry content.
That makes sense.
And he gave a lot of specific rebuttals in terms of some of the internal research that was being shared by this former employee, in that what she was talking about was, I think, one of 13 areas that was under investigation, and in 12 of those areas they found that social media, according to users that had done the survey, was a positive impact, a value add to their lives, and that it was that one area that it wasn't. So, a couple of big responses coming from each side, and I think this just really adds to a big, I think, concern right now for a lot of Facebook investors, in that there could very well be some significant regulation coming. And I think there's definitely a significant push to regulate not just Facebook, but, Twitter and a number of other of these social media platforms, and to put some controls kind of in place. So,
yeah, no, it's going to be a hard one. I probably agree that there does need to be probably some more regulation to what there is at the moment, but it's going to be it's just like how like what's allowed, what's not allowed. Yeah. What does it look? That's just such a big, like, just thinking about that is just exhausting. Like, because then you're going to get the whole army of, free speeches and blah, blah, blah. And it's just going to be a mess. It'll be like, oh, we're trying to censor free speech and yada, yada. And, gosh, I would just say I would not like to be the person that has to try and figure that out.
Yeah, I mean, even just that is a massive polarizing issue, isn't it? That there's people that believe that Facebook should have an active role, a serious active role in monitoring and moderating, I should say, the content that goes through the site, and that it should be very, very, that they should be right on top of it, and that, anything that is possibly harmful to people should not be on the platform. And then you have people who think it should just be an open platform and give control to the individual on the platform to kind of limit what people can see of their own content, and block people and not see things if they don't want to see them, but that other people on the platform should be able to, share their opinions on things and that sort of thing. So it's a big debate, and it's an area that's like the Wild West at the moment. There's not really any rules. So there's a lot of debate about what the rules should be. And this is kind of just another, I would say, definitely something that's harmful for Facebook's business if it comes in the form of Facebook being forced to break up some of their businesses, or even heavy regulation. But I don't even know what form that could possibly take at this point. It's still very early stage, I think, in the regulation of these social media businesses. Yeah,
I tend to agree. I think you're right. All right, bad luck, Facebook. That is a tough week. Yeah. Jeez, ouch, brutal. Should we leave that one there and move on? Talk Tesla a little bit?
Yeah, let's talk Tesla. Let's do it.
Let's do it. So Tesla, it's the end of another quarter. So we get production delivery numbers. This is obviously a metric that people watch like a hawk. So Tesla is, I'm kind of getting a bit tired of saying this, but Tesla, they had another record quarter, which is pretty good. They delivered 241,000 cars, and they produced 237,000 cars, most of which were Model 3 and Y. Very few, like there was only 8,900 Model S produced and 9,000 delivered. So the majority of that number is Model 3 and Model Y, but also the Model X is not currently in production. It's just the Model S, because they did that whole switch over to the new updated version. They've got the S sorted. Now they're working on the X and yada, yada. So
interesting.
Mostly 3s and Ys. Which the interesting thing that I take out of these delivery numbers, they're now, if you annualize that, they're now running at a production rate of pretty much 1 million cars a year, which is it's impressive. And people have been just like doubting for so long. They've been like, yeah, right, Tesla. This is back in the day where they'd make like 50,000 cars a quarter. It's like, yeah, they're never going to get to 1 million a year. You serious? But it's like, boom, like literally 1.5, 2 years later, here we are. It
is. It's insane how quickly they've gotten to 1 million. I remember not too long ago, I was thinking like, man, to get that. Well, I think they were pushing towards 500,000 was kind of their goal at the time a couple of years ago. And, I just remember thinking, wow, that's a lot of cars. And to even get to 1 million, and then, where do they go from there? Can they get to 5 million? Can they get to 10 million? Can they push up into some of these big automakers? So yeah, kind of crazy that they're already at almost a yearly run rate of 1 million cars.
Yeah, it is pretty impressive. They've still got a long way to go to be at the same production levels as some of the biggest automakers in the world, but they're on their way. I mean, they're growing very, very quickly. And the thing that blows my mind, and we've talked about this before, so I won't harp on too much, is that these numbers, 241,000 cars delivered in a quarter. This is before the Gigafactory Berlin or Gigafactory Texas have made any cars. They have made 0 cars. And obviously those two factories are going to start by building Model Ys, which is by far the most popular Tesla. And then they will just ramp up over the next year, which will add significant, delivery numbers. And then as soon as they finish the Model Y production line, then they start on the Cybertruck line. And they've got more than 1 million orders for Cybertrucks. So it's like, holy smokes. There's just so much. It just makes me laugh because I remember it was like a year or two ago, and the whole narrative from the short sellers was, Tesla's got a demand problem. They've got no demand for their vehicles. It's like, holy smokes, you couldn't have been more wrong if you tried. But it is pretty insane. As the other thing that blows my mind is that Tesla, and they announced this a few months ago, they've noted their production capacity for the rest of the year is sold out. So it's like if you want to go on the waiting list, you're gonna have to wait. And obviously they wish that wasn't a problem, but it just is. They're so popular, and they can't, obviously they've got factories coming online, but they're not online yet. So it's just, it's pretty insane.
It's crazy. And this is all in a world where, they're doing 240,000 cars a quarter in a world where we still are nowhere near being mostly electric. Right. And that is, I would think, an inevitable fact. Absolutely. That we're going to head in that direction. And, for the vast majority of people right now, getting an electric car is just it's not the most convenient thing. And when that infrastructure is in place, that will be more people who can even think about getting it, right? Getting a Tesla, right? Yeah. Or another electric vehicle. I mean, you have people who live in apartment buildings, I would say, is probably a good example where it doesn't make any sense right now. You
can't really charge it.
No. Yeah. I mean, if you're really an enthusiast, you can go to the charging network to charge and sit there every now and then, but it doesn't really make any sense unless you can have it in your house, and maybe even for a lot of renters as well, although I'm sure it's an option to get the charging stuff installed. But maybe for renters as well, it's something that's a bit of hesitancy. But over time, I think that will change. And that means there's a lot more demand coming down the pipe for Tesla.
It's just a tiny little snowball at the top of the hill at the moment. It's just going to start rolling down, gathering snow, and everything will continue to move in the direction of the electric vehicle, which is kind of exciting. One thing that actually caught my attention is that a guy that I follow on Twitter, Rob Mauer, he does the Tesla Daily podcast. He put up a post which showed the history of Tesla's Q3 deliveries. And it's pretty insane. Like from 2012, which was the release of the Model S, their first larger production car. They started in 2012, Q3, they did 321 deliveries. Then the next year, 5,000, 7,000, 11,000, 24, 26, 83, 97, 139, and then 241,000. It's pretty insane. If you take it from 2012 to now, compound annual growth rate of 108%. But in all honesty, you can see that there's a massive jump between 2012 and 2013, 321 to over 5,000. So even if you take out that jump, it's still a compound annual growth rate of 60% from 2013 to 2021, which is pretty bonkers in my humble opinion.
Yeah, and I mean, you could even go further and you go from 16 to 21, which is just 5 years. You've got a 10x, which is, I mean, I don't know exactly what percentage that is, but it's a lot. It's in the 40s, impressive. I think. So it's crazy. It's impressive. Crazy.
Delivery numbers are certainly something that Tesla people keep their eye on, and it's looking good. And it's worth noting this is at a time where most other car companies are really struggling and their deliveries are going down. So it's pretty impressive. The other notable thing, which I'll just very quickly touch on, is coming out of Tesla. They are about to release their full self-driving beta to the general public. So pretty much up until now, there's just been a small group of beta testers that I think there's like 1,000 people in that group, or maybe that's an outdated number, but very small amount of people have this full self-driving software or the latest version of it. But recently they did an update where you can now opt in to full self-driving beta if you have bought the full self-driving package. And that triggered a 2-week safety score check. So Tesla then monitors, if you opt in for this software, then they monitor your safety score when they're driving. So they take into account like acceleration intensity, cornering intensity, forward collision sensors, and that sort of thing. They give you a safety score, and then they're going to start rolling out the full self-driving beta to people with 100% safety rating, and then shuffle it down 99%, 98%, and so on. So
that's pretty
interesting. People saying it's going to be years and years till we get full self-driving cars, but they're getting closer and closer. And this, if you're interested in this, you can just go onto YouTube and just type in Tesla full self-driving. And there are so many channels now that have access to that software that upload videos on it that you can have a look. The one thing I take out of it is that you can definitely tell in its current form, it is definitely like beta software. It's not like you wouldn't want to trust it. You wouldn't want to fall asleep with it on.
No.
But when you take into account that this is a computer driving the car, it's still pretty impressive.
Yeah.
I mean, there are some very tricky traffic scenarios that a lot of these guys run the beta through, and it actually does it. Like it really handles it, which is really, when you watch it, it's kind of like, whoa, how did it do that?
Yeah, it's fascinating to watch. It's very, very effective. I think it still has a long way to go. It makes a lot of problems that any reasonable driver would not make. And I think that'll be a big turning point when the car stops making obvious mistakes, because it's one thing just to even for it to get on par with, say, a driver who's not paying too much attention, right? And maybe it still makes some mistakes, but it's overall pretty good. We obviously want it to go far beyond that and actually be better than most drivers, and it probably can get to that. But right now, it's still making mistakes that it shouldn't be making. That, you know, when you go around a corner, if it misses the lines, it might not make the turn, right? And it has to get past that. And I think once it gets past that point, that'll be a big push for it, because it's I don't know. I'm not as optimistic as I'm optimistic in the future that it'll be very, very good, but I think maybe I'm not as excited by it as some people are. Right. And maybe that's just because I can't kind of see, I haven't watched too much of the progress, but whenever I watch, I think it's fascinating how good it is, but I also think that, you know, it's got a long way to go, and that it still makes a lot of obvious mistakes.
Yeah. It's getting better on the mistakes. Now in most everyday driving situations, like, you know, intersections, corners, that sort of stuff, it doesn't make very many mistakes, but it's almost become that way, because now it seems, and you'll see this if you watch any videos, it seems like it's ultra cautious. Like the software is so cautious that you would definitely get beeped at. You know, you would get the hurry up from the person behind you. Without a doubt. So I think maybe they've changed and I don't know, I'm just kind of spitballing here, but maybe they've changed strategies where it's like instead of, you know, just going at full pace and maybe getting some stuff wrong. Instead, they'll go slower and have it get more things right, but then also be a bit of a nuisance because they're going so slowly.
Yeah,
you know what it's like when the light turns green and the guy in front of you doesn't go straight away. You're like, come on, dude, let's go.
Yeah, well, I'd rather the car take too long to make a right turn across lanes than to get it wrong the other way.
You want it to do the safest
and drive
thing,
into
right?
cars. So yeah, I mean, that's got to be the way it has to go that way. Otherwise, no one will ever have confidence in using it to fully drive.
But I think what you're talking about is definitely right. In order for it to be actually properly usable in day-to-day life, it has to be, it has to drive as we would. Otherwise, we would just drive. It's like, dude, you just take it. You could have gone just then. Why didn't you go? Come on. I got to get to this, party I'm going to or whatever it is. Maybe a better example is going to this vaccination clinic.
Yeah, you need to have at least the confidence that it's not going to make super obvious mistakes, that it can see everything in front of it, and that it would stop or turn, when a normal person would turn. Not even a tricky situation, just a normal turn around a corner where there's no lines on the ground, right? And it's not quite obvious, where you're supposed to drive. Like if it can get those right, then you have the confidence to let it drive. But yeah, I mean, it's obviously early stage and it's an exponential process, right? As they get more people driving around, they get more data and that feeds back in.
Yeah.
And it can be
just a big neural net. It's just got to learn.
Yeah, exactly right. It's just got to learn. Elon's just got to sit there and just,
crunch the numbers.
Yeah, just yeah.
It's actually Elon. What's happening to? He watches all the things and he's driving this simulator.
Yeah, right. And
then it learns. Anyway. So yeah, that's what's going on with Tesla anyway. Pretty interesting.
Yeah.
But yeah, very strong delivery numbers. Do you want to do a couple of questions of Q&A before we get out of here?
Yeah, we should do a couple.
I'm watching the time and the time quickly gets away from us, doesn't it?
Yeah. Sometimes we get stuck on stories sometimes. I think we just have a lot to say on certain things. But, I mean, we didn't talk too long about Tesla actually, so it's probably one of the shorter.
That's normally my bad. That's me.
Usually it's one of the longer segments. Very interesting company, so it's hard. It's hard not to talk a lot about it, but we should get into some Q&A. And just before we do, if you have more questions, feel free to head over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast and just leave your questions as a comment on the latest episode. Where do you want to start with this first one that you've highlighted?
Yeah, we'll just start at the top and work our way down.
Start at number 1. All right. Hey guys, I just wanted to ask, how do I get the confidence to buy a stock when it is my first one? Because I've been reading books and watching videos for a year now, and since I've never tried any of these theories of value investing, how do I get the confidence that it will work if I've never tried it? Thanks, guys.
It's a good question. It's definitely a good question. And there's no doubt it's way different. For the first time, it's a way different experience to simply watching a stock move as opposed to actually being invested in a stock when it moves. And even if you have got the best education on value investing, you know that you're not going to touch this company. You're going to invest and then you're not going to touch your investment for 10 years and you're going to back it for the long run. As soon as you buy the stock, I can guarantee you the next day you will look at whether you've made money or lost money on paper. I can just guarantee you. The first investment you make, you're going to be watching it. You'll be like, oh, look, I'm up 0.5%. Oh no, I'm down 2%. And you'll probably feel some pretty strong emotions either way. And that's just the way it goes. You put your money on the line, you're gonna look at it. But one of the ways that I can think of to try and help is to try paper trading. So a lot of I think the ASX has a paper trading functionality on its website, which is essentially where you can essentially play stock market without real money. So you can make investments and track how they go over time without actually putting your money at stake. The only problem with that is that it still doesn't give you the exposure to the emotional side of making investments. That's something that is just inevitable. You're only going to get that understanding of your emotions once you're invested in companies. One of the ways that I tell my friends to go about it is by making your first investment in something like a market tracking index fund. So, even if you have these wildly swinging emotions and whatever, you could literally just hold that ETF for 40 years and you'd be fine. So that's one way I go around it, making your first investment in ETFs, paper trading. Is there anything else you can think of to help you out when you're thinking about making your first investment, Hamish?
Yeah, what you mentioned, I think staying mostly in index funds for as long as is necessary, I think is fine. I mean, for most people, I think broadly diversifying is going to be the way you will entirely invest. That'll probably be the case for 95% of people, although maybe people listening to this podcast represent a larger percentage of that. Those people who want to pick individual businesses, but just start small, start with what you're willing to lose, take your time. Yeah, and I mean, in terms of getting confidence, I think there's really two things that confidence comes from. One is just experience. So inevitably you're going to lack confidence when you start out and you're going to make mistakes. That's why it's important, I think, to start really small. And then also you can just try and learn as much as possible about the company and the industry that you're investing in. So after you've kind of gotten over, I think, some of the more initial concerns and worries that just happen when you just start investing in the markets that are inevitable, beyond that, confidence really comes from understanding the business deeply and knowing that even if some short-term news comes along, knowing whether or not that's going to have an impact on the business long-term. Not knowing whether, if the news pops up that someone is being investigated for something, or something the pandemic rolls around and you don't know if that's going to hurt the business over the long term, that's when you lose confidence in an investment. So that would be kind of my advice. But you've just got to start. I mean, I don't think there's anybody in the history of investing who just from the get-go made good value investments. You know what I mean? Like,
just super confident.
That just is not possible. I would guarantee everyone at least put some money in. Maybe they trade a little bit and then they realize that that's kind of pointless, or, everyone has a bit of a dabble at the start. So you just got to get involved, I think, with a small amount of money so that you don't lose too much.
Yeah. No, I agree. Just start with what you're willing to lose. Almost treat it like treat it as though the amount of money, that you treat it as though you're just making a bet on something. Don't actually treat your investment like you're just making a bet on something. Does that make sense?
Brandon's advice, just gamble in the market.
No, that's not my advice. I hope that made sense. Anyway, okay, next question. Hey guys, I've got a question. You often talk about your interest in real estate, but I was wondering about your thoughts on other asset classes, bonds, commodities, currencies, etc., especially considering the lack of genuine returns in the equity market at the moment. Thanks for your excellent work. Please keep it up.
Yeah, well, just on that last point, on the lack of return in the equity market, the truth of the matter is, and Ray Dalio talks a lot about this at the moment, is there's a lack of genuine return in all markets. Even if you look at the bond market is way more overvalued historically than it is to equities. I mean, bonds are horrible at the moment.
Yeah, you can put down $1,000 now, and in 2 years you can get $1,000 back.
You get a penny out. Like, it's horrible. I mean, bonds in a lot of markets globally are negative on real returns. So after you take into account inflation, particularly this year,
that's true.
Their real returns are negative. So, everything, asset classes, as they are different, and sometimes they do get affected by certain things. Generally speaking, they're all kind of tied together. If bonds are expensive, equities become expensive, real estate becomes expensive. And that's kind of what we're seeing at the moment. But in terms of bonds, commodities, and currencies, there's one of those that is different from those three, and that's bonds, and that's because it's a cash producing asset. So it actually produces something for you. So in that way, bonds are in a category of assets that I would invest in. Commodities and currencies are not. They don't produce anything. Their prices are speculative, and you can't value them. I think that the way that I invest is I value things based on what cash I get out of them. And if a commodity doesn't produce cash for me, then I can't figure out what it's worth for me. In terms of currencies is kind of an interesting one because you actually need, while I don't trade currencies, you actually need different currencies to buy stocks in different markets, and those different markets will be affected by different currencies. So I guess in that way, I do kind of hold, different currencies to invest in those markets, but I don't trade. I'm not trading them. I'm not betting, so to speak, on the movement of those currencies. I just hold them so that when those stocks are cheap in those markets, then I can buy them. So that's
Yeah. I mean, overall, I'm interested in learning more about these different asset classes. However, my thinking is very much along the same line as yours, where I kind of just look at the cash producing ones. Like I've never bought Bitcoin, I've never bought gold, I've never bought any sort of commodity, just for the same kind of reasons that you outlined. But I would be interested to learn about. I also think it comes down to like just circle of competence. What do you feel comfortable? Like I've never made a investment in bonds because I don't feel like I know enough about bonds. I've never made a real estate investment because I feel like I haven't quite nutted out the real estate market yet. So I have made investments in equities, obviously, because that's what I feel like I know the most about. So I feel like there's an element of circle of competence, and I hope that I'm able to one day have a pretty broad circle of competence where I can speak in depth about bonds and commodities and currencies and blah blah blah. But at the moment, I just can't say that I have that in-depth knowledge, I guess.
Yeah, and bonds are boring. Anyway, who wants to own a bond?
Honestly, they are.
It just sounds
so boring.
Just sounds boring. Like bond. Ugh. Like it just doesn't sound nice. So for that reason alone.
Would you like to talk about the 20-year US Treasury bonds? No, thanks.
No.
I think I'll go talk to this other guy.
No. Oh dear. Unless they're Tesla bonds, I guess they might be exciting. I mean, will you get paid or will you not?
Evergrande bonds.
Will it go to zero? Maybe. Probably. No.
Should we do one more or wrap it up there?
Well, let's do one more. You know what? Let's do it. I think this is a good, I really like this question. So right. I want to hear your thoughts on this too. Anyway, loving the pod. Quick question. What do you think about part state-owned enterprises? Specific example, Air New Zealand. The New Zealand government owns 52% of Air New Zealand. Asking for a friend, lol, who is buying this speculative COVID airline dip.
Oh, right. Okay. I have never invested in any sort of state-owned enterprise. I don't have any experience in that realm. I guess that, and I looked up this article before, who kind of this author brings both sides of the argument. There are two sides. For example, they note in certain instances, state-owned enterprises can benefit from having a government on their side. As an example, they note Gazprom, which is the largest vertically integrated natural gas producer in Russia, effectively gained a legal monopoly on gas exports in 2006, which provided the firm with a massive advantage over their smaller rivals. So I guess that makes sense. There are definitely advantages to having a government on your side. You could say that maybe the government will come to the rescue if times get tough as well. And then there are also the other things. If you have a state controlled, if they have a controlling stake in the enterprise, then it says here those types of benefits will often come with some trade-offs. Governments don't always prioritize the interests of public shareholders.
Yeah.
That would obviously be the biggest risk. Instead, heads of government might use these companies to pursue personal, political, or economic agendas. And these concerns are far from hypothetical. Yeah. So I guess that you could look at it in both lights. I think the number one thing would just be to understand, is to try and understand how. I mean, I don't think I'd ever look at investing in a state-owned enterprise personally, but I think the number one thing would be to understand firstly, how much is owned by the state and what are their intentions, what are the likely upsides and what are the likely downsides. Well, yeah, I don't know. I'm certainly no expert with state-owned enterprises. Is there anything that you could add to that?
Yeah, I don't think I have too much to add, except I think it's important to recognize what you mentioned towards the end of that, which is that there can be a conflict of interest in what the government wants out of the business and what's in the best interest of the shareholders. But I mean, partly owned state, partly private companies are private as in owned by public shareholders. They're an interesting. They're a strange mix. I'm not quite sure they make a lot of sense, except in the way that they often occur when a business needs funding. So when they need to be bailed out, often governments, rather than just giving the money, will get something back. They'll get equity stake. Yeah, they'll get an equity stake, so they get actually something in return. But yeah, it's kind of a weird mix. I think for me, it makes more sense for businesses to be either entirely private, in the private sector, or publicly owned. I mean, there's certainly a space for completely publicly owned businesses where there's not a profit motive. I think the post office is a good example that there's not a profit motive to ship or to do delivery to people who live in rural areas. So if that was completely private, they would never get mail because
good example.
So there's some circumstances where it doesn't make profit sense for people to serve customers where it's a necessary service. So that's where kind of the public, the government can step in. But in these like mixed ones, especially so the New Zealand government has a 52% ownership. So they have majority share. They have managerial influence. I don't know. I think that can have strange implications as government changes hand over time. So, but yeah, I'll be honest. My understanding of that is limited.
Maybe is Air New Zealand the only New Zealand airline? Because I feel like maybe that could be a strategic political play to make sure that they're not 100% reliant on foreign companies to provide air travel into or out of their country.
Yeah, it could be. And I mean, New Zealand is a small country, so maybe that plays a role in them not being kind of neglected from travel outside of New Zealand. Yeah. I don't know. Air travel, as I've said many times, is not an area I understand. So maybe if I did, there would be a clear reason why it makes sense for the government to have that share. But I just don't have that understanding. So...
But anyway, that's a little bit on state-owned enterprises. Hopefully it was somewhat helpful. As you can tell, it's not an area that we particularly delve into very often.
Yeah, there's a lot of things like that are confusing areas of markets that I just kind of ignore because there's so many businesses you can learn about that it's not necessary to kind of scratch your head and stay up at night wondering whether this is going to have an impact on your portfolio. You can just not invest in it. So that's the way I go about it. But
you can put it on the too hard pile, right?
Yes, exactly.
It's always an option.
Yeah, it's a big pile, but that's okay. You don't.
It's all right.
According to Charlie Munger, you need one per 7 years, and one investment per 7 years, and you're fine.
Yeah, exactly. And we've come full circle.
Exactly.
All right, guys. Time to wrap things up. Thanks very much for listening, as always. And thanks for submitting your questions. Just a reminder, if you have more questions. Sorry, you guys really did come through when we said we needed some more questions. You guys really came through. So now we have a backlog again. So I do apologize if you're leaving questions on the newer podcasts and we're still kind of a few podcasts behind. We're trying to catch up. We might have to put a little bit more time into Q&A next week or the week after to try and catch up with the questions. But still keep them coming. We love hearing from you guys, and it makes up. I really like the Q&A section of the podcast. I like the fact that we can connect with you a little bit with the podcast.
Absolutely.
It's not just us yapping away at various news topics. We actually have a kind of connection with the audience. But anyway, there's me rambling again. Let's get out of here, Hamish. Thanks very much for joining me as always.
No worries.
Thanks to Sharesight for sponsoring, and we'll see you guys next week.
See you guys.